Chavez thing wrong, so he loses a referendum. But he hasn't lost his job. He's still got that right through 2012, which is why you won't find me whooping up. How about my panel, including Jonathan Hoenig, Tracy Burns, and Peter Schiff? Jonathan, what do you think of that? He's still there for a while.
Yeah, he is, Neil. And I mean, he's friends with Mahmoud Ahmadinejad and every other worthless dictator under the sun. But I applaud the Venezuelan people. I mean, Hugo Chavez has turned that economy into a complete basket case. It is the worst economy in South America with 20% inflation and a completely worthless currency. So there's maybe a little bit of light at the end of the tunnel. But you're right, we've got Hugo to deal with for several more years now.
All right, let's talk about other things we might have missed today. Peter Schiff, what do you think?
Well, I on the same line. I mean, I looked at what happened in the news that came out of Gazprom last week. It didn't really get a lot of play in the media, but, you know, you've got Russia, the largest exporter of natural gas and oil in Russia, saying that they're considering no longer pricing their products in U.S. dollars, but in Russian rubles. And, you know, as the world continues to move away from U.S. dollars, you know, this threatens our phony prosperity. We've had a free lunch in this country. We're able to pay for our imports with dollars. And I think in a few years, we're not going to be able to do that. We're going to have to pay for our imports like everybody else with exports. And it's a lot tougher when you have to actually produce something to consume.
All right, but we are getting a lot more exports out precisely because of that weaker dollar. You don't see that continuing?
Well, we're going to have to send a lot more. We still have a trade deficit of $55+ billion per month. That's a long way to bringing our trade into balance, which is what we're going to have to do if the world no longer prices their merchandise in U.S. currency.
All right, Tracy, what are we missing?
You can argue that we had the so-called Santa Claus rally already. You know, a lot of times coming end of the year, the last couple of weeks of December, the market rallies, and there's a lot to be said about the fact that we had it last week. I think the market is tired in many ways and might just do this like even-keeled, even flow through the rest of the year with a little bump here and there, but there's no real reason why we should rally.
All right, so from here on out, it kind of stays.
I think it's going to, just because it's confused. We're waiting on so much. There's so many unknowns. We still don't know the whole effects of this housing credit crunch thing. We're trying to price these mortgage-backed securities. You know, I think the deal with E-Trade and Citadel was actually somewhat of a step in the right direction. Granted, 27 cents on the dollar isn't all that, but it's something. Citadel offered to buy E-Trade's mortgage-backed securities for 27 cents, basically, a piece.
Citadel took a chunk out of that big hedge fund, demand that the CEO resign. He did. So you think more of this is what we'll see, and that's potentially the way to solve the mess?
Well, you know what? It's a starting point. And to Citadel's, credit, they started low. I guess arguably they could have started lower, but it doesn't necessarily help things going forward, but at least it gives us a place to start with all these things.
Peter, you said earlier in this broadcast another 40% walloping to go in housing. Is the kind of stuff that Tracy addressed, that is outside players buying stakes in these players or mergers of these players, is that the kind of closure you'd like to see?
Well, by the time we have closure, it's going to be a lot worse. We're going to be we're not going to be arguing about whether or not we're in a recession or going into a recession. We're all going to know we're in a recession, and it's going to affect all sorts of credit. Remember, the mortgage, the subprime mortgages, this is the tip of the iceberg. It's a problem for consumer credit in general, mortgages, auto loans, credit card loans. We've simply borrowed too much money from the world. We can't pay it back, and the world is just starting to understand this. So we're going to have a huge repricing of our IOUs. And there's going to be a lot of problems.
Peter, can I ask you this? You're a brilliant, strategist and a great read of the world. But knowing your point of view, how do you not slash your wrist every morning?
Well, first of all, I've been able to help my clients profit a lot from my perspective. So,
when they're around you, they just say,
look, just because I know that there's problems, it doesn't mean I'm going to resign myself to do nothing about it. At least I'm going to help people prepare for what's happening, so it's not going to come as a surprise.
Party, do people avoid you, or do they say, Peter, he's smart?
Well, you assume I got nothing to talk about at a cocktail party but economics.
Absolutely not. I'm not assuming any such thing.
Yeah, well, next time you have one,
I'd assume that. Jonathan might assume that.
Well, next time you have one, invite me. We'll see what happens.
That would be a party-hardy crowd.
Just make sure to invite Jonathan too.
There we go. That would be a party.